And without objection, the chair is authorized to declare a recess of the subcommittee at any time. And without objection, members of the full committee, not on this committee, are authorized to participate in today's hearing. This hearing is entitled Small Business, Big Impact, ensuring small and minority-owned businesses share in the economic recovery. Legislation noticed with today's hearing includes H.R. 2540, the Small Business Lending Fairness Act by Congresswoman Velasquez, H.R. 6054, the Small Business Lending Disclosure Act by Ms. Velasquez, a discussion draft entitled the Small Business Fair Debt Collection Protection Act by Representative Lawson, a discussion draft entitled the Promoting Fair Lending to Small Businesses Act, and a discussion draft entitled the Small Business Lender Registry. I now recognize myself for 4 minutes to give an opening statement. As the pandemic and economic recovery continue to evolve, so do the challenges facing small, minority-owned, and women-owned businesses. First, let's remember how far we've come. In April 2020, there was a panic in the stock market. Businesses were laying off millions of employees, and Congress, Treasury, and the SBA were working tirelessly to get money out the door to stabilize the economy and save jobs. In the initial wave of support through the CARES Act, businesses who had the best relationships with the financial institutions were the first to receive assistance like PPP loans, while in many cases, the smallest businesses, including many minority-owned and women-owned businesses, were the last to receive support, and some were left out entirely. In subsequent aid, Congress targeted harder-to-reach communities through policies like set-asides for minority deposit institutions and community development financial institutions. The American Rescue Plan replenished funding for targeted economic injury disaster loan advancement payments and reauthorized the state Small Business Credit Initiative, which is still in its early stages and will enable state governments to support lending and investments to small businesses as the recovery continues. While the CARES Act kept many businesses alive, the American Rescue Plan is helping businesses and communities recover and grow. The unemployment rate fell from a high of 14.7% in April 2020 to 4% in January 2022. Gross domestic product grew at 6.9% last quarter, and new business formation hit a new record of 5.4 million in 2021. At the same time, businesses face ongoing challenges due to supply chain disruptions, workforce shortages, inflation, and new COVID mutations. One group of small businesses that continues to be left behind in federal support is state legal cannabis businesses. States and territories continue to legalize medical and adult use cannabis. Mississippi just passed legislation establishing a medical cannabis program this month. Yet we will not have even resolved the conflict between federal and state banking laws. Not only must these businesses contend with the ongoing pandemic and other economic uncertainties without being eligible for any federal small business aid, but they must do so while being shut out of the banking system. The public safety threat of forcing this industry to do business in all cash is turning into a public safety nightmare. The recent rash of robberies and attacks in California, Oregon, and Washington are evidence of the dire need to enact legislation addressing this public safety issue. Access to capital and other financial services is critical for all small businesses to share in the continued economic recovery. Whether it's getting a loan to start a new business, accessing credit to cover expenses while supply chains catch up, or just having basic business bank accounts, access to fair, transparent, affordable financial services is important to ensuring an equitable and far-reaching recovery. Today's hearing will examine the availability of credit and financial services, as well as potential gaps in legal protections for small business owners. Additionally, the hearing will review market transparency including demographic, data reporting, and financial challenges small businesses face as the pandemic persists. With that, I will yield to Mr. Luetkemeyer for his opening, but he's not on yet. So why don't we, Madam Chair, I would like for you to speak if you're prepared to give your 1 minute opening.
Thank you very much, Chair Perlmutter, for holding this important hearing on small businesses and the challenges they face when applying for loans. I think you know, and everybody knows now, that our committee has this as a high priority to see to it that we correct some of the wrongs and the discriminatory practices that have been, employed by the banks. But in addition to that, we saw when we responded to the pandemic how the big banks who were handling the PPP program took care of their concierge clients and left our small businesses and our minority businesses basically hanging. And we had to come up with $60 billion more. I worked with Ms. Velasquez to do that so that we could put money into our MDIs, our CDFIs, our credit unions, and our community banks. And they got that money out to our small businesses very quickly. In addition to that, we have $12 billion that we have put together. I work with Mr. Warner to do that. And that $12 billion of that, 1.25 of that has been given out already, and the rest will go through the Treasury Department. So Mr. Perlmutter and most of our members on this committee are poised and working to do everything that they can to support our small businesses. I thank you so very much, Mr. Perlmutter, for this hearing, and I yield back.
Thank you, Madam Chair. We still don't have Mr. Luetkemeyer. So when he does get on, I'd ask Mr. Williams, Mr. Posey, any of the Republicans, if they'd like to do an opening. We will allow Mr. Luetkemeyer, when he gets onto the platform, to do his 5 minutes when he arrives. I'm not exactly sure what the technical difficulty is. Unless we have a volunteer, why don't we go forward? We'll begin with let me introduce our witnesses. And maybe he'll be on by then. So first, I'm pleased to welcome each of our witnesses and want to introduce our panel. Marla Bolonik is the president and CEO of the National Association for Latino Community Asset Builders, the hub of a national network of more than 130 mission-driven organizations. Prior to her current role, she served as the executive director of the Latino Economic Development Center, leading regional efforts on the economic and social advancement of low to moderate income Latinos in the DC and Baltimore areas. Stephanie Devon is the vice president for entrepreneurship and business development at the National Urban League. Ms. Devon oversees management, oversight, and advocacy on behalf of 12 entrepreneurship centers, which provide capacity building and programming subgrants and technical assistance. Amber Littlejohn is the executive director of the Minority Cannabis Business Association. Ms. Littlejohn is an attorney and an advocate with more than 15 years of experience in embattled industries. Prior to her current role, she developed and implemented MCBA's federal advocacy program as the organization's senior advisor. Dr. Alicia Robb is founder and CEO of Next Wave Impact. Dr. Robb manages an investment portfolio that funds women-owned and minority-owned businesses. She is also the research director and a research fellow at the University of Colorado Boulder. Dane Stangler is the director of strategic initiatives at the Bipartisan Policy Center. Prior to his current position, Mr. Stangler was president and chief policy officer at Startup Genome, the visiting Vorzimmer professor at the Long Island University and vice president of research and policy at the Kauffman Foundation. Witnesses are reminded your oral testimony will be limited to 5 minutes. You should be able to see a timer on your screen that will indicate how much time you have left. I would ask that you be mindful of the timer and quickly wrap up your testimony when your time has expired so that we can be respectful of both the witnesses and the committee members' time. When Mr. Luetkemeyer arrives, we will kind of not interrupt a particular person's testimony, but we will insert his opening between panelists' testimony. And without objection, your written statement will be made part of the record. So I don't know if Franklin's in the background, but Franklin, is Mr. Luetkemeyer anywhere near the platform? Is Franklin anywhere near the platform? All right, well, we will proceed. Ms. Bolonik, you are now recognized for 5 minutes for your testimony. You'll see the timer on the screen. We ordinarily would have a chime when your 5 minutes is up. We don't have that, so I'll have to kind of enforce the time today with my hammer, and we'll let you know when your 5 minutes is up. So Ms. Bilonick, you are now recognized for 5 minutes.
Thank you very much. Good afternoon, Chair Perlmutter, Ranking Member Luetkemeyer, and members of the subcommittee. It is my honor to be addressing you today for this discussion on ensuring small and minority-owned businesses have an equal share in our nation's economic recovery. I'm speaking as a former practitioner and current president and CEO of the National Association for Latino Community Asset Builders, NALCAB, whereby I represent our member network of over 150 nonprofits nationwide that support small, Latino-owned, and other underserved businesses that continue to weather the adverse economic effects of the COVID-19 pandemic. NALCAB's vision is to dramatically scale the flow of public and private sector capital through community-based organizations to advance economic mobility of Latinos in the U.S. As a grant maker and CDFI lender, NALCAB strengthens and coordinates the capacity of our network to deploy capital. This year, we will launch our National Alliance of Hispanic CDFI Executives, NACE, convening the largest group of Latino-led and Latino-serving CDFIs in the United States. Since 2008, NALCAB has provided our network members with over $25 million in grants, and with NALCAB support, member organizations have secured more than $450 million for affordable housing, small business, and financial capability programs. We know that the strength of the U.S. economy relies on the fast-growing Latino community's hard work, entrepreneurial spirit, spending power, and leadership. While the Latino community is heralded for starting small businesses at rates higher than other ethnic groups, the adverse economic effects of the pandemic have disproportionately impacted Latino business owners. Due to time constraints, I'll ask that you refer to my written remarks for data on these impacts that is cited therein. We commend the federal government for its swift and responsive funding and programming to offset the economic impact of the COVID-19 pandemic. As we begin another year of living with the pandemic, we wanted to provide some constructive feedback on select recovery programs. PPP has been one of the most important sources of recovery support for businesses and their employees as they've struggled to stay afloat during the pandemic. However, the exclusion of CDFIs in the first round of PPP lending delayed relief to countless small and minority-owned businesses that look to CDFIs as their lenders of first resort and that were turned away by commercial banks. In the current phase of PPP forgiveness, our network reports that the majority, over 90% of our CDFI member PPP loans made, have been forgiven for their clients. For clients that were denied forgiveness, they cited a lack of proper documentation, language barriers, a misunderstanding of compliance with program rules, and technology barriers as some of the reasons for PPP loans not being forgiven. These observations provide useful guidance as we move into this next stage of the small business recovery and are the basis of our recommendations. The SBA's Restaurant Revitalization Fund, which was cut from $60 billion to less than half of that, $28 billion, provided much needed pandemic recovery support to the restaurant industry. These funds were expended within 1 month of the program's launch. It is urgent that this funding be replenished, and it is very relevant to the Latino community in terms of high Latino restaurant business ownership and employment. The Department of Treasury's State Small Business Credit Initiative, part of the American Rescue Plan Act, allocated $10 billion to fund state, territory, and tribal governments' small business credit support and investment programs. The program's success will hinge on its ability to involve mission-based investors working with and for communities. And I'll go into our recommendations. So of small businesses surveyed by Small Business Administration, 37% of respondents stated that they didn't apply for PPP because they did not feel they qualified for the loan or for forgiveness. Another 23% said they didn't apply because the program process was too confusing, and 13% responded that they could not find a PPP lender. In developing future recovery programs and legislation, the barriers to access from the point of view of ease or lack of ease of applying should be considered seriously. In addition, efforts must be made to provide equal access to information on programs as well as clear direction on what entities are offering the program within communities. The new SBA Community Navigator model provides promise insofar as it aims to better connect small businesses to SBA programming through a hub and spoke model that is firmly rooted in communities. We gladly report that several NALCAB members are partners in Community Navigator programs that are currently being launched nationwide. We also commend the SBA in proactively pursuing community-based organizations' input. We are currently in bi-weekly discussions with the SBA's Office of Capital Access to provide feedback on and input into current and upcoming SBA products. The CDFI Fund's Community Development Advisory Board, which I chair, is also a proactive channel for gaining input on program development from a diverse set of community-grounded stakeholders. Small business lending activity and practices have gone without meaningful monitoring for far too long. Section 1071 of the Dodd-Frank Act mandates the collection and dissemination of small business lending data to facilitate enforcement of fair lending laws and enable communities, governmental entities, and creditors to identify business and community development needs and opportunities of women-owned, minority-owned, and small businesses. NALCAB has been a leader in advocacy for Section 1071 of the Dodd-Frank Act to be implemented. Once implemented, Section 1071 will prove what community-based small business lenders have only been able to rely on anecdotal and self-reported evidence to justify, which is the fact that ethnic, racial, and gender biases negatively impact the ability for minority-owned small businesses to access capital.
Ms. Bolonik,
yes.
Your 5 minutes has expired, and I would ask that the rest of your testimony is written, I believe, and
Yes.
You'll get plenty of questions.
Perfect.
So thank you for your testimony. I now will turn to Ms. Devon for 5 minutes for her testimony. You are now recognized.
Chair Perlmutter, Ranking Member Luetkemeyer, and members of the subcommittee, thank you for the opportunity to testify. I'm Stephanie Devon, Vice President of Entrepreneurship and Business Development at the National Urban League, NUL. I bring you greetings on behalf of Mark Morial, our President and CEO. NUL is a historic, civil rights, community-based organization dedicated to economic empowerment and the guarantee of civil rights for African Americans and other underserved communities in America. As a national nonprofit intermediary, we provide direct, comprehensive services for nearly 2 million people yearly through our network of 91 affiliates in 36 states and Washington, D.C. In my role, I manage and advocate on behalf of 12 Urban League entrepreneurship centers, which provide management counseling, mentoring, and training services for entrepreneurs looking to start, grow, or scale their business. Our centers served as the first line of defense for clients during the pandemic. In 2020 and 21, with support from a Minority Business Development Agency CARES Act award, our centers served 11,250 small minority businesses, helping them to secure $138 million in financing and contracting opportunities and save or create 1,200 full and part-time jobs. Last year, with the PepsiCo Foundation, we launched the Black Restaurant Accelerator Program, BRAP, a $10 million 5-year program comprised of cash grants, coaching, and technical assistance to 500 businesses. The grants have been a lifeline for many Black food service businesses unable to obtain or qualify for PPP loans or meet the stringent requirements of certain grants. I'll share the story of Delish Cafe, a Cajun Creole comfort food restaurant based in Dayton, Ohio. In 2018, Delish closed its doors after 8 years. In January 2020, owner Jasmine Brown began selling food again and opened a food truck. Because Jasmine had no business in 2019, she couldn't prove a loss, and though local and state grants were available, the business didn't qualify for them. Jasmine said, so when the BRAP grant came along, it was just a feeling like, okay, well, there's something out there. It's hard when you have a business. In terms of most food trucks, we have less than 5 employees, and for some of us, it may be only us. She was thankful the BRAP didn't have the eliminating criteria that other grants had and expressed hope that more such grants would be available for extra small businesses. Jasmine represents many of our Black entrepreneurs disproportionately affected by COVID, but unlike Jasmine, most were not as lucky. According to data on small businesses from the Federal Reserve Bank of New York, nearly half of Black-owned businesses closed between February and April 2020, compared to just 17% of white-owned firms. The COVID-19 pandemic added to the impact of systemic racism and the racial wealth gap in these communities. These businesses were already financially disadvantaged with weak capitalization, limited banking relationships, and little to no cash reserves to cushion the impact of the pandemic. Access to capital can help bridge the gap for Black small business owners. However, they're more likely to be denied capital compared to white counterparts with similar credit worthiness. McKinsey and Company reported that Black-owned businesses are 20% less likely to get a loan than businesses with white owners. While the PPP program was intended as a lifeline, it left most minority businesses behind, reaching just 20% of eligible firms in states with the highest density of Black-owned firms. NUL called on Congress to enact stringent protections on PPP funds to ensure funds would be directed to businesses with the greatest need. We advocated for dedicated PPP funding and rapid authorities to minority development institutions and community development financial institutions, which ultimately outperformed other PPP lenders by reaching financially underserved businesses with a higher proportion of their loans. Research also showed that Black borrowers able to obtain PPP loans disproportionately received them from fintech companies. While fintech automated systems and algorithm methods tend to reduce racial disparities in lending, their popularity can be problematic. Unregulated products often lack transparency and come with unfair terms. Full disclosure of pricing and terms, reasonable underwriting, fair treatment from brokers, and fair collection practices are critical. NUL has worked closely with Responsible Business Lending Coalition to address the rise of irresponsible lending. This phase of the economic recovery is an opportunity to get it right. For communities of color, access to fair, stable, transparent, and flexible long-term capital is virtually the only way entrepreneurs in these communities can sustainably grow their businesses. We offer these recommendations. Support passage of the Small Business Lending Disclosure Act of 2021, implement Section 1071 Truth in Lending Act for small business disclosures, ensure strong supervisory enforcement of the Equal Credit Opportunity Act of 1974, promote and invest in supplier diversity programs, and invest in community-based small business incubators. This concludes my testimony. I look forward to your questions.
Thank you. You hit it right on 5 minutes. Thank you very much, and appreciate Ms. Devon, your testimony. Now, the chair recognizes Ms. Amber Littlejohn for 5 minutes for her testimony.
Chair Perlmutter, Ranking Member Luetkemeyer, and other members of the subcommittee, thank you for the opportunity to testify at today's hearing. My name is Amber Littlejohn. I am the Executive Director of the Minority Cannabis Business Association. The MCBA is the largest national trade association dedicated to serving the needs of minority cannabis businesses in our communities. We represent minority and allied cannabis businesses, aspiring entrepreneurs, and advocates who share a vision of an equitable, just, and responsible cannabis industry. I am pleased to appear before you on behalf of MCBA to discuss the challenges shared by small businesses as we continue to grapple with the global pandemic. For many minority businesses, including minority cannabis businesses, the outlook is dire. As the nascent cannabis industry takes shape, we see a common tale of small businesses seeking to shake the economic consequences of systemic inequities, only to suffer at the hands of predatory investors and partners who seek to profit from injustice. In my verbal testimony, I will touch on 4 issues, how the pandemic has exacerbated them, and some of the potential solutions. I offer myself and the MCBA as an ongoing resource on these issues. First, the pandemic has been particularly difficult for small businesses, but especially for minority cannabis businesses that were shut out of federal relief. Despite many states deeming cannabis businesses essential during the early stages of the pandemic, all cannabis businesses were deprived of access to these lifelines. Second, the financial challenges minority cannabis businesses face have been exacerbated by the pandemic, but they were not created by it. Despite accounting for 12.4% of the US population, African Americans constitute just 2% of the owners in the nation's 30,000 plant-touching businesses. Low representation is due to the staggering cost to enter and operate, where an application process alone can exceed $1 million. Third, state social equity programs intended to promote ownership among the individuals most impacted by cannabis prohibition are critical to the success of minority cannabis businesses. However, these programs to date are failing to adequately support minority businesses. Currently, only 15 of the 37 legal states have implemented social equity programs. Of the 15, only 6 provide direct funding to social equity applicants and operators. For a glimpse into the financial barriers to entry, consider Connecticut, where cultivation applicants must pay $3 million or try their luck securing one of 56 licenses available in the lottery, only half of which are reserved for social equity. Applicants seeking a cultivation or processing license in Pennsylvania's medical market must prove they have a $2 million in capital and pay a $210,000 application fee. By and large, these programs provide too little too late to minority entrepreneurs to participate. Fourth, small and minority-owned cannabis businesses cannot access the traditional financial services they need to survive, let alone thrive. Many small minority cannabis businesses cannot access core banking services such as deposit accounts, loans, and electronic payments simply because they are in the cannabis industry. As of June 2021, only 700 of this approximately 10,000 federally insured banks and credit unions in the U.S. actively provide some type of banking service to the cannabis industry. Until small and minority-owned cannabis businesses can access financial services on a fair and competitive basis, they will continue to be left behind as other sectors of our economy recover. To address these issues, I encourage Congress to consider a wide range of options, including enacting the Safe Banking Act this session, collecting demographic data about the availability of financial services to small and minority-owned businesses, ensuring protections for CDFIs and other institutions more likely to lend to small cannabis businesses, calling for updated guidance for financial institutions doing business with cannabis firms, and conducting a disparity study to ensure that any comprehensive legislation efforts to address the disparate impact of federal cannabis laws. Supporting small minority cannabis business is not just a moral imperative. It makes good economic sense. Despite their struggles, cannabis social equity businesses contribute $1.20 in social good for every $1 invested in social equity programs. But without relief from Congress, minority businesses will not make it to the end of federal prohibition. Some did not make it to the end of this week. Thank you.
Thank you, Ms. Littlejohn. My colleagues have been hearing me talk about this issue for several years. I appreciate your testimony. I'd like to now turn to Dr. Alicia Robb for her testimony. You are now recognized for 5 minutes.
Thank you, Chair Perlmutter and the ranking member and other committee members. I appreciate the opportunity to provide testimony. My comments are going to focus on the small business financing data gaps and the implementation of Section 1071 of the Dodd-Frank Act. I would first like to highlight, however, our government's own conclusions about the state of small business financing with a few quotes. A white paper from the Consumer Finance Protection Bureau states, "With current data, it is not possible to confidently answer basic questions regarding the state of small business lending." And a report to Congress by the Federal Reserve Board of Governors notes the following. 1, fully comprehensive data that directly measure the financing activities of small businesses do not exist. And 2, up-to-date and comprehensive information about the universe of small businesses is sparse, and most evidence about financing needs and sources is derived from surveys, many of which have limited coverage or rely on non-representative samples. This last quote is particularly frustrating for me because the Federal Reserve Board of Governors had been a source of small business financing data with their survey of small business finances conducted every 5 years. I was employed with the Federal Reserve and worked directly on the 1998 survey. However, they decided that after 2 decades of surveys, they had learned enough and canceled the program after the 4th and final 2003 survey. Then in 2008, when the economic crisis hit, there was no survey in place to collect data during and after the economic downturn. In their most current report to Congress on the availability of credit to small businesses from 2017, which I just quoted and is due to Congress every 5 years, The Federal Reserve relied heavily on the annual survey of entrepreneurs from 2015, which was a new survey conducted by the Census Bureau with funding support from the Kauffman Foundation. At the time, I was a senior fellow with the Kauffman Foundation, and I jointly proposed and advocated for this survey because of the need for more comprehensive and timely data on small business financing, especially data that included business owner demographics. I have continually pushed for more timely and comprehensive data on small business financing because we know there continue to be gender, racial, and ethnic gaps in small business financing and credit market experiences, and we do not have sufficiently robust data to perform the kinds of rigorous analyses that would provide us a better understanding of the barriers and challenges faced by small businesses in general and those underserved groups in particular. A better understanding would allow policymakers to design a more efficient and impactful program to address existing gaps and level the playing field. Congress mandated data collection by Section 1071 of the Dodd-Frank Act in 2010 for similar reasons. As noted in the 2017 report from the Consumer Finance Protection Bureau, these data can provide a broad range of stakeholders across the United States with an understanding of the small business credit flowing into their local communities and allow them to identify credit deserts or sectors where credit flows may be restricted. This in turn may support localized efforts to increase access to credit in various communities around the United States to address unmet credit needs, thereby spurring economic development. In September 2021, more than 10 years after Congress first mandated the data collection, the CFPB released a notice of proposed rulemaking to finally implement 1071 of the Dodd-Frank Act. And here we are in 2022, still with no implementation of the data collection effort that was mandated by Congress. We have spent hundreds of billions of dollars through various programs such as the Paycheck Protection Program and the Economic Injury Disaster Loans, and yet we don't have a process in place for the collection of data that would allow us to evaluate the small business credit market landscape, let alone the effectiveness of such programs. We need to implement Section 1071 of Dodd-Frank Act now, not in another 10 years. We should also ensure that the Federal Reserve System collects annual data in its small business credit survey from a representative sample of small businesses and not from a convenience sample. These sources would provide a much richer picture of the small business credit market from both the supply and demand sides of the market. This would allow us to better identify credit market gaps and inform better policy making. Thank you, and I look forward to your questions.
Thank you, Dr. Robb. And I've been told that we have Mr. Luetkemeyer joining us by phone. And so I'd ask for unanimous consent that he be allowed to join us by phone and without seeing any objection. Mr. Luetkemeyer, you can join us by phone. I'm going to, can you hear us? Can you, let's see if we can hear you. I think he is down in the tile anonymous. Well, we'll keep going with our next witness, Mr. Stangler. And then Mr. Luetkemeyer, if you could hear me, you're welcome to do your 5-minute opening after we conclude this, the panel's testimony. So Mr. Stangler, you are now recognized for 5 minutes for your testimony.
Thank you. Chairman Perlmutter, Ranking Member Luetkemeyer, distinguished members of the committee, I'm delighted to participate in today's discussion about small businesses and economic recovery. I want to commend you for convening this important hearing and thank you for inviting the Bipartisan Policy Center to participate. I'm a Director of Strategic Initiatives at the BPC. We are a nonprofit organization dedicated to combining the best ideas of both parties to promote health, security, and opportunity for all Americans. We've had the pleasure of working with many of you. Thank you for your commitment to finding bipartisan public policies that help America's small businesses and entrepreneurs. As part of our work at BPC, we collaborate with a variety of partners to help ensure that more businesses are started by more Americans in more parts of the country and more sectors of the economy. This is the key to recovery, a recovery not only shared by small business and entrepreneurs, but also driven by them. There are 3 points I'd like to highlight for you today. First, the present landscape of small business and entrepreneurship can be broadly characterized by 2 trends. On one hand, many small businesses continue to struggle with the negative effects of the pandemic. In the most recent reading of the Census Bureau's Small Business Pulse Survey at the end of January, nearly 40% of small businesses say they don't expect full recovery of their business for at least 6 months. Many are struggling with rising costs and difficulties hiring and retaining workers. At the same time, new business formation is at record high levels and has been that way since the summer of 2020. The number of business applications filed by those deemed to be likely employers was 37% higher in 2021 than in 2019. There are some indications that entrepreneurship has been high among women and people of color. Millions of Americans see small business ownership and entrepreneurship as their road to opportunity. These trends tell us that small and young companies are ready for recovery. They're looking to grow. They need a supportive public policy framework. Second, there's little question that government relief efforts, such as PPP and COVID EIDL, helped many small businesses stay afloat. Many of the small business owners we speak to praise those programs as the difference between closing or continuing their businesses. In particular, modifications that were made to those programs along the way, such as inclusion of online lenders and community development financial institutions, were essential in helping get relief to those, such as business owners of color, who otherwise confront financing disparities. This is an important lesson for future policymaking. Third, public policy must encourage and support private sector financing innovations that are expanding access to capital for small and young companies. There's been considerable innovation in small business financing over the last several years. New business models, new technologies applied to underwriting, new capital structures, and many more. Banks remain the main source of external credit for small businesses and entrepreneurs, and many banks have been investing heavily in technology. Many small and community banks have also formed productive partnerships with fintech companies. Much of this innovation is directed at closing gaps for traditionally underserved groups like women entrepreneurs and business owners of color. We encourage you to help promote these innovations, including by continuing to find ways that they can support public programs. Additionally, we encourage policymakers to improve coordination across existing federal programs. There are already scores of efforts across multiple federal agencies devoted to helping small businesses and entrepreneurs. Many of them and their partners across the country do exemplary work. But there are undoubtedly areas where performance can be improved and coordination can lead to greater effectiveness and resource efficiency. Lastly, we encourage you to continue to explore ways to balance the regulatory burden across lenders and reduce regulatory costs, especially regarding partnerships between banks and fintechs that, in some cases, can get passed along to small businesses. Chairman Perlmutter, Ranking Member Luetkemeyer, other members of the committee, thank you again for your leadership on small business issues. I'm happy to elaborate on any points, and I look forward to your questions.
Mr. Stangler, thank you for your testimony. I'd like to reach out again to the ranking member, Mr. Luetkemeyer, otherwise known as Anonymous, and see if he, can you hear us?
Yes, I can. I apologize for all of the technical problems. I'm in the middle of a snowstorm, ice storm, sleet storm here, and I've got technical difficulties and I'm technically challenged, so we got a mess. But I apologize for the delay in getting on and being on a phone instead of the computer. So thank you, Mr. Chairman.
I'm glad you joined us. If you'd like to do your opening statement now, we welcome it, or I can begin the questions, and then you'll ask questions after me, and you can do your opening. I want you to be to do it at your leisure.
Well, why don't we just skip my opening, and I'll try and ask some questions. And if you give me a little leeway with some of the questions, a little more time, maybe I can insert some of the narrative from our opening speech, comments, if that'd be fine.
Yes, sir. That, I think the committee would welcome that. All right, so I will begin with my questions, and I will begin with Ms. Littlejohn. In your testimony, you touch on 4 issues facing minority cannabis entrepreneurs: the pandemic.
I'm on the committee.
So Blaine, you're going to need to mute. Okay, the pandemic, high barriers to market entry, a failure of state social equity programs, and the inability to access the traditional banking system. In many cases, it seems these issues can create a feedback loop and amplify obstacles for people of color seeking to start or operate a cannabis business. Can you describe how, without access to traditional credit or investors, minority cannabis business owners are being pushed into predatory loans and business arrangements?
Yes, thank you, Chairman. So with federal law limiting access to traditional funding, many cannabis businesses are initially funded through friends and family and personal wealth. And given the wealth disparities, especially among those most impacted by cannabis prohibition and the war on drugs, this is not an option. Large operators have no issue accessing capital. In fact, for many of them, the pandemic has been a boon. This, unfortunately, has not happened to small cannabis businesses that regularly see rates as high as 20 and 25 and even 40% if they can obtain a loan. For those who can't secure loans, we commonly see significant undervaluation, and frequently operators have to turn to equity partnerships. And these partnerships, unfortunately, are often extraordinarily predatory. We have inequitable distribution of profits where the equity partner, the social equity partner, is living in poverty while the investor is taking 3-4 times as much. We have operators who are giving up a 49% stake, but then being forced to rent property at 4 to 7 times the rate of the going rate for real estate. And unfortunately, again, these are really common. We see contracts that will force the social equity partner to sell, even for a minor breach of contract, to sell their license to the investor for pennies on the dollar. And because oftentimes the process of getting to the point of application in itself can be thousands, if not millions of dollars, one of my board members paid over $400,000 before she was awarded a license because she was required to hold commercial property just to apply. That doesn't mean she was guaranteed, but just to apply. And so we have people that are selling art, selling plasma, mortgaging family homes, sleeping in cars, all trying to stay above ground and keep themselves above water and to try and to participate in an industry where we sold the promise of inclusion and participation, and we are leaving people out in the cold.
Thank you for your answer. Dr. Robb, I have a question for you. I want to ask you about the CFPB's 1071 proposal, which would require financial institutions to collect demographic data in small business lending. And as you said, you worked at the Fed and for the Kauffman Foundation. Isn't somebody already collecting small business lending data? And, wouldn't this be a duplication?
Thank you, Chair. No, it would not be a duplication. There are very little data available on small business financing. The Small Business Credit Survey, which is now being done every year by the Federal Reserve System, is done on a convenience sample, and so it's not nationally representative, so it's limited in that way. That's also from the demand side, which was also the case for this survey of small business finances. The annual survey of economics, which is done by the Census Bureau, that is done annually and it is nationally representative, but the focus of the survey is not financing, and so there's limited information about small business financing, sources, costs, etc. It's also from the demand side. So the CFPB is actually looking to create microdata on loan applications from the supply side, and that does not exist. The closest thing to that are the call data reports, and then the CRA has data, but in both of those cases, they proxy small business lending by the size of the loan, not the size of the firm. And so this proxy has been shown by researchers to be inaccurate. So you have lots of large businesses getting small loans and small businesses getting large loans. So it's not a one-to-one match. So the CFPB in 1071 is really collecting unique data.
Thank you very much for your testimony. My time has expired. I'd now like to yield to the gentleman from Missouri who's going through a storm, Mr. Luetkemeyer. for such time as he may use in connection with opening comments as well as questions. Mr. Luetkemeyer, you're recognized.
Chairman, and thank you, Mr. Chairman. Again, I apologize for the situation here, but Mr. Stangler, I'd like to start with you. Would you share your concerns that you have with the CFPB small business data collection rule implementing 1071 of Dodd-Frank? I think, this is, to me, is a really, really big problem. I've got a lot of problems with it. So my question initially here is, would creating additional compliance and resource burdens on financial institutions, particularly smaller institutions, promote or stifle small business lending? Mr.
Thank you, Ranking Member. Yep, thank you, Ranking Member Luetkemeyer. I'm located in eastern Kansas, and I think I'm in the same snow and ice storm as you, but we've been spared the technical challenges. Feel sorry for you. Thank you for your question. As Chairman Perlmutter noted, I used to work at the Kauffman Foundation. I worked with Dr. Robb at Kauffman and helped create that annual survey of entrepreneurs that she referred to. So I don't think anyone would ever accuse me of advocating for less data on small businesses or on entrepreneurship. I think what is concerning about the CFPB action and the rulemaking is that this has not gotten bipartisan political support, and it's not gotten support from a lot of the folks in the industry, in the lenders. BPC had a Main Street Finance Task Force effort a few years ago, and that task force was unanimous on every single issue except for this one. And there were concerns raised by lenders, by former agency folks, by others in that effort about some of the suppressive effects this might create, that Ranking Member that you refer to, some of the compliance costs, some of the burdens. There's no question that we need better data on small businesses, on small business financing. Some of the challenges that Dr. Robb alluded to are significant and real and need to be addressed. I think what concerns us is that there are other bureaucratic barriers that can and should be addressed first. A lot of the data that's collected already by the Census Bureau, by the IRS, and by others, there are barriers to using and sharing that data that we might get insights from without creating additional burdens or additional layers. And I do worry, and we worry, and the folks we talk to in the industry and among small businesses worry about some of the incentives or the disincentives created by some of this rulemaking. But again, I think the broader issue is how can we get better data and how can we do it in the least burdensome way possible?
Well, as the ranking member on small business, I can tell you there's a lot of different entities that are collecting data right now, and not the least of which is the National Federation of Independent Businesses, which that's your small business groups. But there are other entities. In fact, tomorrow I have a Zoom call with the Job Creators Network, which is kind of like the Chamber of Commerce, although it's on a radar group that does a lot of surveying. And they survey small businesses, and I get a report from them every month or every other month. And so there's a lot of data out there that I think if you need some more, in fact, you need, whatever you want to survey, let me know. I can ask the job creators to put on the next survey. So I think there's the opportunity for more data is there. The kind of data that you're trying to get, or they're trying to get, CFPB's trying, is what is concerning to me. Dodd-Frank specifically provides the borrowers the right to not give race and gender and ethnicity information to financial institutions, yet the bank loan officers got to be very careful because they can't ask that question. Yet, if they do, they get in trouble, and if they don't, then they have to guess. And if they guess, they leave themselves open. In my mind, I've seen the way CFPB operates. When they're in the Accord rate years, holy cow, they went out and intentionally intimidated individuals and extorted money from different businesses based on their guidance that they put out there, which was not something they could even enforce. And so when you're now going out here and trolling basically these businesses to see if you can get them hooked on some kind of a problem here by putting things out there that they have to guess at what the answers may be, holy cow, this is opening up Pandora's box for these folks. This is, to me, this really gets them in some really murky waters, and I'd just like your opinion on that situation.
Thank you, Congressman. You're right that there is a lot of data out there on small businesses, on entrepreneurs. This is where I think there are other ways to go about filling some of these data gaps before launching new processes. We worked a lot with some of these federal agencies, and some of the folks I've talked to point to significant barriers in just sharing some of that information between agencies. So I think there's other ways to use some of the information we have and get new information before we start a whole raft of new concerns, as you raise with this effort.
Well, if the chairman would allow me one more question here, I don't know what our time is, but the privacy of the information that the CFPB wants is a very, very real concern to me also, from the standpoint that we've seen the different cyber attacks, cyber hacks that have gone on within our own government. I know that CFPB is not immune to those attacks either. And here they're going to accumulate more information. Some of it is guesswork. So if you guess wrong, what happens to those people if they're hacked? The privacy of all this additional information for whatever intentions they may have doesn't seem to outweigh the risk that's there for the consumer. What do you think about that, sir?
Thank you, Congressman. Yes, privacy is always a concern, a significant concern, especially with the rising number of cyber attacks we've seen. I know if we are going to improve the state of small business data, if we are going to use those other sources that you refer to and that you see constantly, and if we are going to have public agencies hold some of this data, I know there are other agencies that have significant and strong confidentiality and privacy protocols in place. There are also private sector partners who work with government and hold government data who excel at this as well. So who have found a way to protect privacy, but this is obviously an overriding concern here.
Thank you, Mr. Stangler. Mr. Chairman, I want to thank you for going along with a little extra time here. I want to work with you. To me, this privacy situation is extremely important. This is something we have to work on together to make sure that the CFPB does not allow that information, the additional information they're collecting, to be able to have access to other folks. So with that, I thank you. Yield back.
Thank you, Mr. Luetkemeyer. Thanks for going the extra mile and getting on even by phone while you're in a snowstorm. Colorado, we got about 8-10 inches. We handle it a lot better than you folks in the Midwest. That's all I can tell you. I want to now recognize. All right, I want to recognize the gentleman from Georgia, the chairman of the Agriculture Committee, for 5 minutes for his questions. Mr. Scott, you're now recognized.
Thank you, Chairman Perlmutter. And I would like to open up my questioning with Ms. Littlejohn. As the chairman mentioned, I am the new chairman of our House Agriculture Committee. Hemp, cannabis, that now has become our fastest growing product. But there's some mixed problems here. I worked very closely with the chairman. He spent a lot of time working on this issue because of the criminality, and he's done a magnificent job in attempting to legitimize the financial arrangements so that it's not cash only, which created so much critical criminal activity, if I may. But here we are, fastest growing agriculture product between hemp, cannabis. We have such a variation of state laws where we are. It's reminiscent of the of Prohibition time that gave birth to our friends in the mafia. So here we are. Now, we're also going into our farm bill. We've got to address this issue. We can no longer hide it. So you raised a point here, several good points, but I want you to tell us what the state of the art is, where the problems are, and what we need to do to make sure our farmers are doing what they need to do. There are different applications between hemp, the marijuana. Where does all of this fit? And in this confusion, with lack of proper information, That's what the criminal element preys on. So your statement was, if I got it correct, you said you referenced a social equity partner. And I think you meant in that regard, African Americans are having difficulty in even getting the license or access to capital. So I just want you to share with us and share with me where we are so that as we get into this issue next month into the Farm Bill, I want to be certain that we can help our farmers. Already they're growing it. Can you get with us and first of all, tell me what you meant by that statement relative to, you said, so it impacts a social equity partner relative to licensing, I think.
Yes, Congressman. What that means is certain states set up programs intended to ensure that the individuals who have been most harmed by cannabis prohibition, including primarily African Americans, have a chance to actually participate in this burgeoning industry. But unfortunately, only 15 of the 37 now, I got to keep track of the 37 now states have these programs. And unfortunately, only
I
six
want
of
to get that right. You said 15 of the
37 have
why didn't you say 15 of the 50 states? Is
yeah,
there?
15 of the 37 that have legal cannabis programs.
Oh, I see.
We will get
Okay.
to 50 soon, but 15 of the 37 that are legal now. Unfortunately, in your home state, Congressman, we saw this in real time where there was an extraordinarily high cost for the application. And so that alone led to only 4 Black applicants.
And
even,
what was that cost?
I believe it was I am unclear, but it was well over $150,000. I believe it was
Wow.
actually $250,000. So at that point, only for the larger applications. And so only 4 African Americans applied for licenses, and all of the licenses ended up going to larger non-minority firms. And
Now, let me ask you, do you think this was intentionally to discriminate against those at the lower end of the economic ladder?
I believe this is about, it was 200K, it has been clarified, $200,000. This is about discriminating against all small businesses because companies are going in and trying to capture markets. For instance, in Virginia, there are currently only 3 large companies that control the entire medical cannabis market in Virginia, and they actually just got permission to run ahead of everybody else.
My. Now, what
Mr.
do
Scott,
we?
I'm sorry, but your time has expired.
Okay, let me just say this. Miss Littlejohn, I'd like for you, if you don't mind, to get in touch with my office because we're putting together witnesses and you have a wealth of valuable information that will be very helpful to our farmers who are engaged in this and our agriculture industry. Thank you, Mr.
It would be
Chairman.
my pleasure.
Thank
All right,
you.
thank you, Mr. Scott. Now I'd like to recognize the gentleman from Florida, Mr. Posey, for 5 minutes for his questions.
Thank you, Chairman Perlmutter. I appreciate it. Mr. Stangler, based on the title of this hearing, we're here today to help ensure that small and minority-owned businesses share in the economic recovery. The usual stock and trade of this committee is subsidizing small and minority businesses in credit markets and providing what some of us believe is needed additional regulation. The economy right now is characterized by fairly strong recovery numbers, but crippling inflation and tight job market conditions. We also have the uncertainty of public health regulations, and those impacts on small businesses are profound, especially for the hospitality and travel sectors. Would you help us put the priorities in context in terms of helping small business participate in the recovery? How does access to credit and more credit regulations for small businesses through the CFPB stack up against crippling inflation, finding workers, predicting that your business will be able to stay open and easing some of the heavy-handed burdens of existing regulations. Where should Congress put its priorities?
Thank you, Congressman. I think the best place to look for guidance and prioritization is from the small businesses themselves. And right now, one of the best sources of direct input from small businesses is the Census Bureau's Small Business Pulse survey. This reaches about 1 million small businesses, and it's been through 7 or 8 phases. The latest phase just concluded at the end of January, and it's very good. A year ago, and I can double check these statistics after the hearing, but I think a year ago, when the Census Bureau asked small businesses what their top future need was, what is their biggest need as they tried to recover, it was financial assistance. We were in the midst of a surge. Consumer demand was still had still shifted. Lockdowns and restrictions were still in place, and a lot of small businesses said they just needed financial assistance. Fast forward to this year, to January, financial assistance is now 4th, 5th, or 6th, I think, on the list. The number one need that small businesses say they have is to identify and recruit employees. And that's been the top spot for, I think, 2 or 3 months. And the number 2 need is marketing and sales. They want to grow. They're ready to grow. And so I think those are the priorities. We know from other surveys, including a survey that was released last month by the Goldman Sachs 10,000 Small Businesses Voices program, that inflation is a major, major burden for small businesses in that survey. So we know from these latest surveys, these large-scale surveys, that finding workers, keeping workers, and dealing with rising costs are major challenges right now for small businesses.
I was going to ask you next, regarding the inflation being a big threat, what small businesses are telling you about the impact, and I guess you pretty much told us it's the top priority. Am I correct in that assumption?
Inflation was definitely a concern in some of these latest surveys, for sure, among small businesses, yes.
Innovation is a hallmark of the history of our U.S. financial system. Could you identify the most promising financial innovations on the horizon for small businesses today, and what the biggest threats are to those promising ideas?
Thank you, Congressman. As I mentioned in my oral remarks, and as you can find in my written testimony, the last several years pre-pandemic were characterized by lots of private sector innovation in the space of small business financing. Fintechs obviously have gathered a lot of attention, online lenders, but banks too. Traditional banks have invested quite heavily in technology. Many of them have become almost fintech lenders themselves, and many of them have formed partnerships with fintechs, and those partnerships have really helped small and community banks as well. There's been a number of other innovations in the space. There are folks trying to pioneer new types of hybrid capital structures, especially directed toward helping those small businesses owned by women, owned by people of color that maybe can't access through traditional channels. And for some of those new business models, those partnerships, I think there's 2 regulatory concerns. One is in the bank and fintech partnership to help level that regulatory playing field and to help reduce some of the burdens on those partnerships. For some of the new business models, I think there can be greater regulatory clarity around what is and isn't permitted so that innovation can proceed for small business financing.
Well, I appreciate it very much, Mr. Chairman. I see my time has expired. I'm happy to yield back. Thank you.
Thank you, Mr. Posey. The chair now recognizes gentleman from Illinois, the chairman of the Artificial Intelligence and Computer Learning Task Force, Bill Foster, for 5 minutes for his questions.
Thank you, Mr. Chair. Many lenders, including fintechs, use business credit scores to address creditworthiness. And similar to consumer credit scores, business credit scores are a metric for risk that are based on payment history, credit utilization, length of credit history, and outstanding debt. But according to a recent report, 45% of small business owners did not even know that they had a business credit score. 72% did not know where to find it, and 82% did not know how to interpret it. Now, there's various opinions among consumer interest groups and credit bureaus about the accuracy of personal credit reports and whether report inaccuracies negatively affect a consumer's overall credit score. And these phenomena have been subject to considerable discussion within our committee. But now, in regards to business scores, Ms. Bolonik and Ms. Devon, are these business scores prone to the same inaccuracies or mistakes that personal credit reports sometimes experience?
Thank you, Congressman Foster. I'll just start in, and Ms. Devon hopefully will chime in after I'm done. I do believe they're subject to the same potential inaccuracies. I think this is actually a growing and emerging area in supporting small businesses, which is basically providing financial capability services that are targeted to small business financial management. We have seen in our membership that there's been a shift in the focus of financial capability support from working with consumers, potentially with the aim of building an asset like purchase of a home, to shifting to more financial capability support for small business owners. There has been sort of a lack of support to small business owners in this area. And I do think that, just anecdotally from my own experience as a practitioner, that most small business owners do not know that they have a business credit score. Most small business owners are using using and impacted by their personal credit scores. And therefore, I think there's a real lot of opportunity to support small business owners in terms of educating them about how to start small business credit, how to build and repair small business credit, and to monitor their small business credit.
I would add to that, and I want to thank you for the question, that business credit scores are clearly an important indicator for many lenders as to how a borrower is going to manage their debt, and it's based on historical performance or behavior, and whether you're more or less likely to be delinquent on your payments. And so low scores would deem you to be a higher credit risk, and that may even necessitate a small business having to put up collateral or to provide a personal guarantee, which the business may not be in a position to do. And I also think anecdotally, again, that these calculations can certainly vary by institution and may not necessarily be disclosed to the borrower. And so that may mean the score is somewhat subjective, and as a result, not necessarily an equitable measurement of risk. And also the loan pricing, the term, the amount, depends on that business credit score. So it has the ability to lead to less favorable pricing and terms for a minority owned business or women-owned business that just doesn't meet those requirements. And so, I think it may not always be an accurate reflection of risk, and we need to be very careful in terms of how we use those business credit scores. And those borrowers, those small businesses, need to be aware of how those scores are being used, how to figure out, how to determine how those are calculated, and make sure that they look at that as potential risk.
Now, are there organizations or businesses that are set up to counsel businesses on how to improve their business credit score? Or are the same entities that are generating the business credit scores also making money by offering advice on how to improve it, which I always thought was sort of an outrageous conflict of interest?
Well, I'll jump in here and really quickly and just say that that our Urban League Entrepreneurship Centers provide that kind of technical assistance and counseling, and we do spend a lot of time working with our business owners to educate them on these types of credit scores. And so I think that's one of the things that we want to be able to do, is make sure that we have those technical assistance providers available.
Yeah, I remember, when I started this company when I was 19 with my little brother, and it's doing fine now, but in the early days, we used to have regularly scheduled meetings when we decide which one of our vendors we were going to stiff this week. And we didn't have business credit scores to worry about in that discussion. But it's a new world, and I think it's important that businesses understand who's looking at them and how they're being judged. Thanks, my time is up.
The gentleman's time has expired. We don't want to know who those vendors were. So now we will turn to the gentleman from Texas, Mr. Williams, for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Chairman. I hope you will not use that hammer on me anytime soon. For the panelists, I want disclosure is I am a small business owner myself in Texas and have been for over 50 years. Now, the Biden administration is hammering Main Street America with so many regulations that it is hindering the economic recovery and preventing capital from flowing to rural and underserved communities. I mentioned this stat in a hearing yesterday, but it was so astounding it deserves repeating. A study by the American Action Forum showed that President Biden has already implemented over $200 billion in new regulatory compliance costs on American businesses during his first year in office. These costs are amassed by an estimated 131 million hours, man-hours, in new paperwork that must be conducted in order to be in compliance with all the new regulations coming from Washington, D.C. One of these regulations that we have heard about today is the CFPB's 1071 rulemaking on small business data collection. There are many problematic aspects of this rule, and me, along with Ranking Member Luetkemeyer and Congressman Hill, have introduced a package of bills to help mitigate some of the worst parts of this proposed rule. The bill I'm introducing in this package would prevent loan officers from guessing the ethnicity of a loan applicant based on their appearance and last name if they do not voluntarily disclose this information. This racial profiling requirement is currently in a proposed rule, and we have spoken with numerous bankers and trade associations about how this will put loan officers in an extremely awkward situation and give inclusive, unusable data to the CFPB. There should not be any federal requirement where someone must guess the ethnicity of another American based on their appearance. So, Mr. Stangler, how would you recommend training loan officers to fulfill this racial profiling requirement on how to properly guess a loan applicant's ethnicity using only their last name and appearance?
Thank you, Congressman. You'll forgive me for not being as familiar with the details of your legislation as I should be, but after this, I will certainly go review the bill and happy to talk to you and your staff. I'm not sure I have a good answer for that. I'm not sure I would know how to train or what to tell the loan officers subject to these requirements.
Well, that's actually a good answer because you can't. And I'm going to tell you, let me go back in history a little bit. I'm one of the oldest on the committee. I was actually was working jobs in 68, 69, 70. And a lot of those were in financial institutions, banks and lenders, GMAC, Ford Motor Credit, Interstate Securities. And back then, there was boxes of ethnicity that were asked to be checked when somebody was applying for a loan. And it was very uncomfortable, very insensitive, very racial. And now I think about those days, we've got out of that, and here we are back in those days again. And it really something that totally takes me back and surprises me that we're talking about this very thing that was not satisfactory back when I was working in the early 70s. So that's just a statement I want to say. I'd love to hear the argument for that. Secondly, if we want to help small businesses, we need to allow them to keep more of their hard-earned money. We saw the benefits that cutting taxes had on the economy before the pandemic when we saw wage growth that outpaced inflation, the lowest unemployment numbers in decades, and there were more investment in durable goods that businesses could cash flow. Unfortunately, under this current administration, the constant fear of new taxes on the horizon has forced our businesses to go to the defense. They're not as willing to invest their money in fears that they will need money later to pay future tax liabilities. So, Mr. Stangler, at a time when small businesses are already feeling the harmful effects of inflation, how do you think small businesses will deal with an additional tax increase if this administration gets their way?
Thank you, Congressman. You're exactly correct that inflation, as I mentioned with Congressman Posey, is a top, if not the top, concern for small businesses right now. At the same time, many of them haven't seen their revenues rebound. And so, as you know, as a small business owner, many of our small businesses are in a tight squeeze, with revenues still not back to pre-pandemic levels, with inflation and rising costs in their supply chain, and having to pass some of those along to their consumers. So I would hope that any changes on the horizon would take those into account, that our small businesses are in a really tight spot right now as they look to recover and grow, and really struggling with inflation and trying to get their revenues back up.
Well, thank you. And just finally, I'd just like to say this 1071 rulemaking actually takes us back. It does not take us forward. And I'm saddened by that. Thank you very much, Mr. Chairman, and I yield my time back.
Thank you, Mr. Williams. Gentleman yields back. The chair now recognizes Mr. Caston of Illinois for his 5 minutes of questions.
Thank you, Mr. Chairman. Mr. Vane, I got a couple just open-ended questions for you. And it's a little hard because we're writing history at the same time that we're sitting here, but you are so close to what's happening on the street with the entrepreneurs out there, and we all get caught up in our stories, but you're hearing the stories firsthand. We're almost 2 years to the day from the first COVID case in the United States. If you remember, it was February 2020 when there was those first stories about people in nursing homes in Seattle. We saw this huge collapse in GDP, this huge growth and boost in unemployment. And we had all sorts of folks saying we have no playbook for dealing with this deep a downturn that doesn't leave a lot of people behind, because we knew in 2008, the people who were banked came back well. A lot of people lost a lot of housing value. People who were outside the banking system didn't come back. And so we did a whole lot of unconventional things. Yes, we expanded monetary policy, but we did a lot of fiscal policy, checks in people's pocket, the PPP, money to states. And we're now sitting here looking at least at a macro level, a fairly remarkable moment. I mean, we have this V-shaped recovery that was not in anybody's bingo card for what we thought was possible. From your perspective in the communities you serve, what did we get wrong? Who's still left out in this recovery?
Thank you for the question. Our minority businesses have been left out. I recognize that there have been relief programs. We're speaking specifically about the pandemic. We look at PPP and we see that was expected to provide relief to business owners who were struggling at the time. Many of those businesses were front-facing businesses. They were, impacted by social distance guidelines. And so they were struggling to keep their employees, to pay their utility bills, meet their payroll, and they couldn't do it. And that PPP program was intended to be a lifeline for those businesses, but it just frankly didn't work. And anecdotally, I can tell you that speaking with our business owners on the ground, they face challenges. They didn't have the lending relationships with the SBA lenders. They didn't have the back office and the technical and financial know-how to fill out a lot of the paperwork, and they were really struggling. And so a lot of times they missed the boat and the opportunity. We were very pleased in the following iteration where our business owners actually were able to get some of that financing from CDFIs and from MDIs in the communities that knew them and understood the challenges they were facing. But I will tell you that they feel very much left out of the recovery and the equation. There have definitely been some improvements. I will absolutely say that, but on the whole, our businesses continue to struggle. They need capital, and they need capital desperately. Loans are difficult. Grants are welcome, and some of the programs that we've put in place, like the Black Restaurant Accelerator program that I mentioned in my oral remarks, really go a long way toward helping those businesses. They need the coaching and the training to undergird the capital that they're getting, and the capital needs to be affordable and it needs to be appropriate for those businesses.
So I think I'm hearing you echo Mr. Stangler, and I don't want to put too many words in your mouth, Mr. Stangler, but I think you said that in the surveys you saw that labor and marketing needs were sort of the top needs of small businesses and some concerns about rising prices. You're all hearing from our questioning. We're having a real-time debate in Washington right now. On the one hand, should we invest in those communities, figure out how to get people into work, do the job training, make the investment, get the kind of grants that you're talking about, Ms. DeVane. On the other hand, we're hearing people say, no, we should not invest because that might create inflation in the economy. And to the extent, Ms. DeVane, you're talking with people who are feeling all the same pains that Mr. Stangler described. Number one, do you agree that those are the top issues that Mr. Stangler described? And number two, put yourself in our shoes. What would you like to see us do in this moment? Do you think we should prioritize getting resources to those businesses who need them? Or should we say, let's take the brakes off, let's let's not do any investment in the economy right now because we're concerned about inflationary pressure.
So I do agree with Mr. Stangler that that inflation certainly is a concern. I think he also mentioned hiring and keeping staff. Those are absolutely concerns of our business owners. But the top concern is capital, which allows you to market your business, which allows you to hire employees and pay those employees. And so I would say that is the priority. And yes, I absolutely think as the clock runs down, that we would need you to do more to assist those businesses. And I know we're over time, but the CNPP program that the SBA has is one way that we're going to be helping our business owners recover from the pandemic.
Well, thank you. 5 minutes is never enough time, but I appreciate your time. And if you have more thoughts, please follow up with our staff. Thank you. Yield back.
Thank you.
Okay, the gentleman yields back. The gentleman from Georgia, Mr. Loudermilk. We've got a lot of Illinoisans and a lot of Georgians on the Zoom today. Mr. Loudermilk, you are recognized for 5 minutes for your questions.
Well, thank you, Mr. Chairman, and that's what makes this subcommittee great is the number of Georgians that we have on here. So, hey, I appreciate this this hearing, and I appreciate that the majority is talking about helping small and minority-owned businesses. I've been talking about this since I've been in Congress, and especially during the pandemic. But recent history indicates that, unfortunately, the majority has been opposed to one of the most important tools that can help those businesses. That's fintech. The list of leaders eligible to participate or lenders eligible to participate in the state small business credit initiative was established 12 years ago, and it does not include fintech companies, which are now a critically important part of small business lending. In fact, fintechs were the #1 type of PPP lender for Black and Hispanic owned businesses. GAO reported that when Congress added fintechs as eligible PPP lenders, lending to minority owned businesses increased. Last year, when this committee marked up the American Rescue Plan Act, I offered an amendment to update the list of eligible lenders for the SSBCI program to include fintechs. Unfortunately, the majority rejected it. This is inexplicable opposition to fintech is depriving minority-owned businesses of the source of credit that they rely on most. Even the SBA administrator has said that we should embrace the role of fintech in small business lending, putting House Democrats at odds with the Biden administration. So a question, Mr. Stangler, would including fintechs in the SSBCI help get funds distributed to minority-owned businesses?
Thank you, Congressman. I think you correctly characterize the research findings on PPP, that fintechs, online lenders, when their participation was included in the subsequent modifications, we saw those disparities close. And research has found, I believe there was some new research out this week or last week, confirming those findings, that fintechs help distribute PPP government relief to business owners of color who didn't get the benefit, especially in the first and second rounds. Applying those lessons forward, as you suggest, would, I think, help continue to enhance those channels. Full disclosure, we do work with fintechs. We also work with banks. We work with advocates and philanthropies. Our advocacy arm has endorsed some bipartisan bills that would expand fintech participation in government programs, such as the 7A program. And we do believe that continued expansion of those channels would help the borrowers that you're trying to help.
Well, thank you. There, in my opinion, and to many, there's no question that bank fintech partnerships have enhanced the ability of small businesses to access credit. But unfortunately, my colleagues on the other side of the aisle eliminated the OCC's true lender rule, which needlessly added legal uncertainty to these partnerships. Another question, Mr. Stangler, in your testimony, you said small businesses benefit from a variety of private sector financing options. When the government takes away sources of small business lending, does that help or harm those businesses?
Thank you, Congressman. As I mentioned in my comments, I believe with Congressman Posey a few minutes ago, we've seen an explosion of financing innovations in the private sector over the last decade. Pre-pandemic, during the pandemic, many of those are in response to these financing disparities that the country has struggled with for many years. I think our position is the government, in partnership with the private sector, needs to continue to do all we can to expand those channels and provide clarity on what is permissible, obviously punish bad actors when misbehavior does occur, but broader channels, wider channels are going to help our small businesses versus narrower channels.
Okay, and final question, Mr. Stangler. What should we as policymakers be doing to expand options for private sector small business lending?
Thank you, Congressman. I would highlight a couple of two things. One, in the bank and fintech partnerships that you allude to, there are regulatory burdens in those partnerships. So we know a lot of small and community banks benefit from greater technology from those fintech partnerships because the costs of adopting those technologies in-house for the smaller banks can be prohibitive. But there are regulatory burdens, there's regulatory reviews, there's regulatory unevenness there that I think the government can and should resolve. Second, with a lot of these new models coming on board, for example, I mentioned hybrid capital structures. From what I hear from folks who are working on these, trying to get capital to those underserved groups, there's a lack of regulatory clarity from the government, from the IRS, as to how those capital structures are going to be treated. So I think regulatory clarity on those would be helpful.
All right, thank you. Unfortunately, Mr. Chair, my time has expired, so I will yield back.
Thank the gentleman from Georgia for his questions and yielding back. We now turn to the gentleman from Florida, Mr. Lawson, who has one of his bills has been noticed up as part of today's hearing, the Small Business Fair Debt Collection Practice Protection Act. Mr. Lawson, you're recognized for 5 minutes.
Thank you, Mr. Perlmutter, and to the ranking member, I'm sorry he's out there in all of this snow, and I was wondering how you were going to make it when I looked on TV and see what was going on in Denver, you know, but I know you know how to do that. Last time I was out there, I couldn't hardly handle it. I would, you know, currently small business loans, and I, like Mr. Williams, a small business owner for about 34 years. I think I still am, but I'm not able to make any money from it anymore. Currently, small business loan borrowers do not have the same protection individual consumer have under federal law. Small business owners oftentimes place their personal finances and capital to start and expand their business. Small business owners often apply for credit using their personal credit cards, yet they do not receive the same protection as individual consumers, which is why I, as he said earlier, I reintroduced the Small Business Fair Debt Collection Protection Act, which protects small business from harassment from third-party debt collectors. Would you agree that by expanding the protection that currently exists for consumers to small business owners, that these businesses will be more likely to succeed? How do you suggest we better protect entrepreneurs and provide more access to capital without potentially hurting their personal credit? And I can remember when I first went in, how you could hardly had any credit cards when I first went in insurance and financial business. You know, you had to get something from the bank in order to get started. So this will be for everybody on the panel, and maybe we can start with Ms. DeVane.
Thank you for the question. Yeah, I think that that we know that many Black-owned businesses do use their personal credit. We know that a lot of these business owners looking for PPP money did go to fintech companies. That was an alternative source of capital. They're not all bad. They tend to be race blind in terms of the ability for some of those businesses to get capital, but we do need to be mindful that the practices are fair, because these business owners are often desperate for funding and they really don't know what they don't know. And in many cases, you know, they're just ill-informed about the pricing, the credit, and the terms. So what we really want to make sure is that our business owners at all of our urban league centers are not being subjected to any predatory or abusive products, and that they really understand and have transparency around all of the terms that they need in order to get this desperately needed capital. As a former banker, I understand the need to make sure that these businesses have access, but like consumers, small businesses need to be protected from the bad actors. And I'll stop there because some of my colleagues may want to add to that.
Okay, thank you.
Well, I'd just like to hop in and say, you know, I'd be remiss if I didn't elevate what I believe to be one of the greater focuses of this conversation, which is elevating the rights of business borrowers to be equal to the rights of consumer borrowers. This is something that I think if it were more widely known in the public would be an outrage. Small business owners are targeted by predatory lenders and now more than ever are extremely vulnerable to predatory lenders. And so I really am hopeful that through this conversation, we can also, discuss the importance, regardless of regulatory burdens on the banking industry, of really elevating the rights of small business borrowers and making them equal and on par to consumer borrowers.
Did anyone else want to comment? Well, look, Bolonik, while I'm on what you just finished, many people don't realize that some credit card issuers report business credit card accounts to the Consumer Credit Bureau, which means that the way you use your business credit card could raise or lower your personal credit score. To what extent do business credit scores impair small business owners, especially minority-owned and women-owned businesses, for getting loans? And are these scores always accurate and reflective of risk?
Well, I'll start with the second question. So much like personal credit scores, these business credit scores are also equally susceptible to error or misreporting. And so it really requires monitoring just like we do for our personal credit scores. I'm sorry, I lost my train of thought. The other piece that I think is really important is that for small business owners, personal and business credit is always inextricably linked, whether that be because of the business structure that they select, which does not necessarily count their business as a separate entity. They typically are starting off as sole proprietors, not necessarily incorporating their businesses. And so therefore, there is an intermingling of their personal and business credit. And so I think the fact that the business credit can be reported to personal bureaus is absolutely something that could undermine the personal credit and the personal ability to, rise out of poverty for small business owners.
Thank you, Ms. Bolonik, and thank you, Mr. Lawson. Your time has expired.
As a Perlmutter, before you leave, it was 80 degrees here in Tallahassee today, and I would like to see if I could send something over there to you.
It was 7 degrees here this morning, so thank you. I appreciate you sharing that information.
With that, I yield back.
The gentleman yields back. The gentleman from North Carolina, Mr. Budd, I'm sure the weather is nice in North Carolina too. So we'll recognize you now for 5 minutes, Mr. Budd.
Chairman, thanks for recognizing me. I thank the panel. And it was not 7 degrees, but at a zero, it was 70 degrees today in North Carolina. So we were talking about access to capital and how important that was, particularly over the last few years when businesses have been grappling with the effects of the pandemic. And Mr. Stangler, again, thank you for being here. What role did financial technology companies or fintechs, what role do they play during the pandemic in helping to provide access to capital and to small businesses?
Thank you, Congressman. As I think more and more research has found over the last couple of years, fintechs, online lenders were crucial in two ways. One, through the disbursement of government relief, especially through PPP. As we've heard from fellow panelists, as we've seen in research, as we've heard from some of your fellow committee members, the fintechs, online lenders helped close some of those disparities that existed pre-pandemic, existed in the first round of PPP, and continue to exist, but fintechs helped close those gaps. I think second, for a lot of small business owners who either were unsuccessful in receiving PPP or may have received PPP and idle, but still needed additional capital, or maybe didn't want to apply or couldn't apply at traditional financial institutions, I think fintechs, online lenders have helped fill those gaps as well outside of the public efforts.
Very good. So we see that, and we've always known that small businesses are critical to the growth of the American economy. It's about 43, almost 45% of GDP, and the creation of about 62% of new jobs since 1995. So this growth is reliant on access to affordable credit. The CFPB's 1071 rulemaking could unnecessarily reduce the availability, and increase the cost of credit for small businesses. So again, Mr. Stangler, do you think that imposing new regulatory requirements on lenders will be counterproductive to increasing access to credit?
Thank you, Congressman. I think additional regulatory burdens on lenders, no matter their form, can always have pass-through consequences to their borrowers, consumer or small business. As we touched on a few minutes ago, especially when it comes to the partnerships that banks and fintechs have been forming, including with smaller banks, we know there are regulatory challenges there among the review, the regulatory burdens, an uneven regulatory playing field between the banks and the fintechs and some of those partnerships. So adding burdens in whatever way, shape, or form can really hinder some of those innovations and some of those kind of basic functions that, as you put it, those small businesses rely on.
Very good. So continuing on, a recent NFIB survey reported 47% of owners reported job openings, or business owners, job openings that could not be filled. Could you describe some actions Congress could pursue to support small business owners in their currently very challenging effort to hire people? And again, back to you, Mr. Stangler.
Thank you, Congressman. This is a really important question because this is a really pressing issue for many small businesses. I've heard a couple of other panelists mention this as well. We know this from anecdotal conversations, as I'm sure you hear in your district. We know this from small-scale surveys. We know this from large-scale surveys, that hiring and retaining workers is a major, major challenge. In a few weeks, actually, BPC has a small business policy report coming out. And one of the major focuses there is how we can help small businesses hire and retain workers, especially as they seek to compete with their larger competitors. I think some of the things that we'll highlight in that report, which I'm happy to share with you and your staff when it's available, are how do we help small businesses, especially the smallest of the small, help their employees with retirement, help their employees with emergency savings. The government has already taken important steps there with bipartisan support, but there's still some gaps, some lack of regulatory clarity, some regulatory burdens facing those small businesses when it comes to retirement plans, when it comes to helping with training or education, and when it comes to helping with emergency savings. So I think there's a number of steps there that would really help small businesses with their workforces.
Well, Mr. Stangler, as a small business owner and as a member of Congress, I look forward to reading that. If you would share that with us when it's available. I thank you for your time, for the rest of the panel as well. And stay warm, Mr. Chairman, and I yield back.
The gentleman from North Carolina yields back. Chair now recognizes the vice chair of this subcommittee, Ms. Presley from Massachusetts, for 5 minutes for her questions.
Thank you, Chairman Perlmutter, for convening this important discussion, and thank you for your long-standing advocacy and leadership on this issue. But this is such an important discussion on ensuring that minority and women-owned small businesses share in the benefits of any long-term economic recovery. Those who have been hurt by the pandemic-related economic hurt should be those who receive the most help while our economy recovers. Yet, for too many Black and brown folks who have been effectively locked out of relief, whether by regulations or exclusionary credit and lending practices, a lack of startup capital, or by laws that favor businesses that have already attained success. This is even more true for cannabis businesses who were explicitly excluded from pandemic PPP and economic injury disaster loan programs within the SBA. For many Black and brown folks working tirelessly to gain a foothold into this industry, this exclusion has added insult to injury. Ensuring Black and brown folks can start and sustain cannabis businesses is a matter of economic and racial justice and restoring communities that have been ravaged by the failed war on drugs. There are many attempts to keep those that were disproportionately locked up because of this failed war on drugs, to keep them locked out from this multi-billion-dollar industry. So this need has become even more evident when compounded by the disparate impact COVID has had on communities of color and minority-owned businesses. Though Black Americans were most heavily impacted by the war on drugs, only 2% of marijuana businesses nationwide are Black-owned. My home state, the Commonwealth of Massachusetts, is no stranger to this inequity. However, we were the first state in the country to mandate equity and inclusion within its legal cannabis industry, and we were the first to launch programs designed to assist folks disproportionately harmed by the war on drugs. And yet, the industry remains predominantly white and male still. Ms. Littlejohn, how has the pandemic exacerbated current racial inequities within the cannabis industry?
Well, like all minority-owned businesses, cannabis businesses are feeling a crunch because the resources needed to sustain during the economic downturn, the resources needed to secure businesses and make the infrastructure and technological challenge upgrades are just not there. There is no access to loans. When folks are going out to try and get more resources to upgrade their businesses, their companies are being grossly undervalued. And this is also leading to safety concerns because as their resources decline, there is also, again, the inability to make safety upgrades. So while during the pandemic, we have seen an exponential growth in some of the large companies, there was a point during the pandemic at which some of these companies were almost actually over 300% of their pre-pandemic value. And meanwhile, the rest of the industry and small businesses and minority businesses are folding at a pretty regular rate, especially in states like Massachusetts. Especially in states like California. In Massachusetts, what we've seen is they're rolling out these equity programs, but the funding is not there. And there is a clock ticking on the amount of time that people have to get their businesses up and running in Massachusetts. So I will tell you, I regularly get calls from businesses in Massachusetts that are struggling. So the pandemic has hit all minority businesses hard, but it has been especially hard on minority cannabis businesses that really don't have anywhere to turn for resources.
And is that exactly why we need to be intentional in ensuring that minority and women-owned cannabis industries or businesses are not left behind in our recovery efforts, that would be more intentional and deliberate in that?
Absolutely. And I think that many people agree that ensuring that the people who've been most harmed by cannabis prohibition are participating is an important part of legalization. But the way the state laws are created right now, they are dealing with almost insurmountable barriers to entry and the challenge of competing when markets are captured by a handful of individuals. So it is really a dire situation. And if we don't get the resources now, many minority businesses are just not going to make it to legalization. They won't make it to the end of the year. And as I mentioned earlier, there are some, unfortunately, that did not make it to the end of this week.
So it's really clear that cannabis business owners need more support. And again, I do want to commend our chair, Mr. Perlmutter, there for his courageous leadership and work to ensure that cannabis businesses are able to safely access financial and banking services in the face of what remains still great stigmatization of the industry. But we also need comprehensive and systemic reforms to ensure that our communities are not left behind, like the Marijuana Opportunity Reinvestment and Expungement, or MORE Act, to finally reverse these failed federal policies criminalizing cannabis, provide expungement and resentencing for those with prior marijuana-related offenses, and invest in the very communities ravaged by the racist war on drugs. Long overdue. So while we have the House, the Senate, and the White House, we must act.
All right, the gentlelady's time has expired. Thank the Vice Chair for her comments and her questions. It looks like we'll now finish with two Tennesseans. I'm not sure how that happened, but we will turn to Mr. Kustoff for 5 minutes for his questions.
Thank you, Mr. Chairman. Thank you for calling today's hearing, and nothing wrong with two Tennesseans. Mr. Stangler, if I can, thank you, and thank you also to the other witnesses for testifying today. Could you talk, if you would, we've talked a lot about fintechs. Can you talk about the partnerships, if you will, between fintechs and community banks, how they interact with each other, the benefits that that fintechs can provide to community banks, especially as it relates to the competitive and resource-intensive nature of banking? What benefits can fintechs offer community banks, and maybe vice versa?
Thank you, Congressman. My 9-year-old has also become a Memphis Grizzlies fan, so I'm obliged on his behalf to say go Grizzlies. Congressman, I think you're right that these partnerships, not only have they increased in frequency and scale, and in the decade prior to the pandemic, partnerships between banks and fintechs really proliferated. The banks get technology, the fintechs get access to more traditional forms of financing. In some cases, fintechs work with banks to participate in programs like this SBA 7A program. This is especially important for the small and community banks. The cost of investing in some of these technologies is just too high. It's prohibitive for them to do it on their own. Federal Reserve put out a paper, I believe in September, I'll have to double check, highlighting the importance of technology, of fintech partnerships for community banks specifically, and offering guidance on how community banks can do this most effectively. So even the Federal Reserve has kind of put its stamp of approval on this and pointed to the benefits. The fintechs obviously benefit too. Not all fintechs are created equal, but for many of them, working with the banks brings them credibility, brings them growth, brings them new customers, and also access to those new communities that community banks serve who might not have access to traditional forms of financing. So we believe these are highly important, and we see that evidence in their growth.
Thank you, Mr. Stangler. On a different line, I think we can all agree that innovation and emerging technologies really do offer great potential to access financial services, especially in underserved communities and in rural communities. I say that because a large part of my district is rural. Part of that is the peer-to-peer payment systems like PayPal, like Venmo, like Cash App, and we understand the benefits of that. In President Biden's American Rescue Plan, which was passed last March, there was a provision in the plan that included businesses to report to the IRS transactions over $600 when using these third-party payment platforms. I think that we can all agree that there are some strong potential privacy implications as it relates to individuals with this provision. May also at some point be used or be seen as a disincentive to use these platforms. Do you have concerns about how they in fact could be disincentivized to use these platforms based on the provision in the American Rescue Plan?
Thank you, Congressman. I'm familiar with this provision, although to be candid, it's not something I've spent a great deal of time studying. I will say that, as you mentioned in your remarks, these new companies, these new innovations, fintechs, online lenders, have been very, very important for our smallest of small businesses. They come with costs. Their interest rates can be higher, their loan terms can be shorter, but we know that millions of small businesses and Americans are using them, including those small businesses who are deemed to be higher credit risk. So I will say that, again, while I haven't studied this provision in depth, in detail, I think we need to be wary of steps that might overly burden some of the benefits that these fintech innovations bring.
Thank you, Mr. Stangler. And Mr. Chairman, I yield back my remaining 11 seconds.
Thank you, Mr. Kustoff. You yield back. Now we'll go to Mr. Rose, the second Tennessean, to close out the questions. Mr. Rose, you're recognized for 5 minutes.
Well, thank you, Chairman Perlmutter, and there is absolutely nothing wrong with having two Tennesseans to end this hearing, but thank you for calling this hearing, and the topic I think is timely. Small businesses have a big impact on our communities, and of course, many are struggling with the current rising inflation and the cost of regulation that we've heard about today. In my district, the 6th District of Tennessee, 93.8% of employers are small businesses. The men and women who operate and work for these enterprises are some of the hardest working people that I meet. These businesses are the heart of our economy and the engine that keeps this country moving. And I might add that I'm an operator of just such a small business. Now, as time is limited, I'll dive right into my questions. The pandemic was incredibly challenging for the American private bus and motor coach industry, as almost all major sources of business for this industry and revenue were restricted by the mandatory lockdowns. Congress created the Coronavirus Economic Relief for Transportation Services, or CERTS, which provided $2 billion in grants to support this industry. According to data from the Treasury, 93% of CERTS grants went to small businesses and 33.4% were minority owned. The motor coach industry is still struggling, however, and will be one of the last industries, I fear, to recover, especially given their reliance on live events and touring around the country. Mr. Stangler, could you discuss how Congress could help at this point to ensure that segments of our economy that were hit the hardest by COVID-19, like the motor coach industry, are able to fully recover?
Thank you, Congressman. This sector of the economy is not one that I have studied in depth, but I fully accept and agree with your comments that it's been hit hard and will likely be one of the last to recover, especially as you mentioned, because of its dependence on live entertainment and concert venues. I know there are some proposals being floated around in Congress to provide more assistance to small businesses, sector-specific assistance, whether that's restaurants or gyms or motor coaches. I think for those proposals to be effective and to pass, we would like to see them have bipartisan support and to be targeted, because we know that many sectors of the economy are farther along in the recovery than others. I would also propose that for sectors like this, and again, it's not a sector I have studied well, we can look to other existing streams of federal spending that go into the small business economy. I'll just quickly mention that we've done a lot of work, for example, on federal procurement. I'm unaware of what the state of federal procurement spending is with the motor coach industry, but some of these existing streams of billions of dollars I think are really important for small businesses, especially minority-owned businesses, as they recover.
So you speak of the report, and that actually was going to be my next question for you about the Bipartisan Policy Center's report. What could you please describe some of the barriers to entry that the report referenced and possible solutions for those?
Congressman, you referring to our report on procurement, on small business procurement?
Yes, and particularly as focused on federal procurement.
Yes, thank you. This was a report we put out last June. It will also be the subject of the Small Business Policy Report, one of the subjects of the report that we put out in a few weeks. Congressman, I'll give you just a couple of quick stats, some of which I'm sure you're familiar with. The federal government spends $560 billion, I think we're up to, each year. That's quote unquote small business eligible. Small businesses are supposed to get 23% of those contract awards. For 8 years in a row, the government has met that goal. However, the number of small businesses actually participating as contractors has fallen by 40% in the last decade. And the number of new entrants into small business procurement, so small businesses not being a contractor last year, being a contractor this year, that number's fallen by 80% in a decade. There are significant barriers to entry, and this particularly harms minority and women-owned businesses. The women-owned business goal, which is 5%, has only been met twice in 25 years. There are significant ways that the federal government can and should reduce those barriers to entry, because this is a lot of money that flows into the small business economy every year.
Well, thank you for that. And Chairman, I see my time's about to expire. As one small business operator, I will tell you, and it turns out to be helpful when you end up being in Congress, my business, we just ignored government procurement because it seemed like such a labyrinth to try to navigate. And, I consider myself to be a reasonably intelligent person, but every time we dug into that, we concluded that it was just too difficult. And so, one of the solutions has to be that we have to figure out how to make it easier for small businesses with limited resources to go after that government procurement business. Thank you, Chairman, and I yield back.
Gentleman yields back. Thank you, Mr. Rose. Without objection, statements from the following organizations will be entered into the record. One from the National Association of Federally Insured Credit Unions, the American Financial Services Association, the Center for Responsible Lending, the National Coalition for Asian Pacific American Community Development, the National Association for Latino Community Asset Builders, and Gusto. And I'd like to thank our witnesses for your testimony today. We really appreciated your remarks. I'd also especially like to thank Dr. Robb for having a golden buff on this from the University of Colorado. Go Buffs. And without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you are able. And without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. Ms. Littlejohn, you had that specific request from Mr. Scott, so I hope you will follow up on that. I remind members written questions and materials for the record should be submitted to the email address provided to your offices. And with that, I will bang down this hammer. This hearing is adjourned.